The default advice given to all investors is that the best and simplest strategy that you can implement is to invest your money regularly into a fund that tracks the performance of the S&P 500. And that strategy will almost guarantee you very high returns in the long run, and probably would have performed better than if you had just chosen a few different stocks yourself. But why does the S&P 500 get all of the love? Is it really the best index fund to invest in? There are lots of other indexes out there. Can any of them actually match the performance of the S&P 500 or even outperform it? That's what I want to take a look at in today's video. I'm going to compare the historical performance of many other different index funds against the S&P 500 since 2010. Historical performance obviously isn't an indicator of how well it is going to perform in the future, but it is all we have to go on at the moment. First off, let's see what our benchmark is. How well has the S&P 500 performed since 2010, so we know what we have to beat. For anybody that doesn't know, the S&P 500 tracks the 500 largest publicly listed companies in the US, and it is weighted by the size of their market caps. Well, the S&P 500 has grown a huge deal since 2010. The actual percentage growth since then has been 421%. Let's see, has any other index even come close to this? So there are many different types of index funds that you can choose from. You can pick ones for specific countries, specific regions, or specific industries, for example. First off, I'm going to take a look at some other US based indexes, such as the Dow Jones Industrial Average and also the S&P 600 Small Cap Index. The Dow Jones as well as the S&P 500 are probably the two most well-known indexes in the world. The Dow Jones tracks the performance of the top 30 blue chip companies that trade on the New York Stock Exchange and the Nasdaq. Examples of companies on this index are the likes of Apple, Boeing, Caterpillar, IBM, Intel, Microsoft and Nike. These are all good solid profit making companies. The performance of the Dow Jones has also been very impressive since 2010. The returns that you would have got if you started investing back then would have been up to 347.9%. So this is obviously very good, but just not enough to beat the S&P 500. Next up, let's have a look at the S&P 600 Small Cap Index. So instead of tracking the performance of huge companies, what this index does is tracks the performance of smaller companies listed on US stock exchanges. To be included on the index, a company would need to have a market cap within the region of 700 million to 3.2 billion US dollars. So smaller companies you would think have a greater chance of seeing some huge potential growth, but also at the same time they have a higher chance that they could go out of business. So let's see how this index actually performed since 2010. So since 2010, the percentage growth on the S&P 600 small cap was up to 380%. This again is huge growth, and it actually is better than the Dow Jones, but is still not good enough to actually beat the S&P 500. So we haven't found a US index to actually beat the S&P 500, so let's have a look elsewhere in the world. First off, let's travel to the UK and have a look at the performance of the FTSE 100. So this is the top 100 companies in the UK. That index has seen a growth since 2010 of about 109%, so that is well down compared to the indexes we have talked about previously, who had the high 300s and low 400% returns. So we have seen 4 times less growth in the UK stock markets compared to the US. Now let's go to Germany and see how the top 30 companies performed in Germany, which is all tracked on the DAX 30 index. So the DAX 30 index since 2010 has seen a performance there of 170%. Although this is better than the UK's FTSE 100, it is still well below the S&P 500's return. Next up is the Nikkei 225, which tracks the top performing companies in the Japanese stock exchanges. This index had pathetic growth since 2010. You'd only have growth of 0.54% if you invested back in 2010 until now. So you would have lost money in real terms if you started investing in the Nikkei 225 because of inflation. So the UK, Germany and Japan are fairly well developed nations, so maybe if we go towards more developing nations, they should see higher growth potential. So the next index I'm going to have a look at here is the MSCI Emerging Markets Index that tracks stocks from emerging markets around the world. So since 2010, let's have a look and see how this performed. So a bit of an asterisk needs to go beside this one because it has only been trading since 2014. But since 2014, it has seen about 75% growth. So this probably puts it on par with what we have seen in the European markets. Okay, so from looking at those, it is pretty clear we are not going to find one particular country that has performed better than the US in the last 10 years. But how about we have a look at some particular industries that might have done very well? If I think of growing industries, the ones that come to mind for me are the clean energy market and the water industry. The S&P Global Water Index tracks the top 50 largest companies in the water industry, but these companies are primarily in the US, the UK and France. I think they make up about 75% of the total companies. And if we have a look at the charts here, it has actually performed very, very well. It has returned about 304% since 2010. And that is a lot better than the FTSE or the DAX or even the emerging markets index. I actually have another video on my channel that goes over this index. I think this is one that has a potential for a lot of growth in the future as governments commit more money towards kind of capital projects that are to do with helping the environment and stuff like that. So I think this is one that we could see definitely continue this kind of level of growth in the future. Next up, let's have a look at the Global Clean Energy Index to see how that has performed compared to the water industry. Well, this industry hasn't done quite as well just yet and has only seen about 108% growth since 2010. But as you can see, most of that growth has come in the last 2 years. So maybe this could be one that will see a much higher growth rate into the future from here on out, especially with all of these Paris agreements and stuff like that. There's going to be a lot of investment in clean energy. So I wouldn't be surprised to see the growth rate between now and say 2030 being somewhere well above 108%. Okay, so I haven't found an industry that has performed better than the S&P 500, but now let's have a look at a slightly different index. The next index is the IPO index. So this tracks the performance of any company that has gone public within the last 1,000 days. This index again has only been actually around since 2015. So since 2015, this index has seen growth of 122% or so. So this has been performing very, very well in a short period of time. A lot of this growth again has come within the last year, and we know that the US has gone a bit IPO crazy recently, so I don't know how long that trend will last, but maybe if that trend continues we can see even further growth on this index, but it is still not good enough to beat the S&P 500. I'm running out of options here pretty fast. The only other index funds that I could see possibly beating the S&P 500 are going to be crypto related. There are a few crypto funds in existence at the moment, but there's not much choice and they're not very diversified, so I don't know if they're going to offer you much in diversification if you're investing in any of these index funds yet. That being said though, the likes of Ethereum have grown 816% within the last year. So if you put all of your money in Ethereum, it's probably a lot more risky than if you put all of your money into the S&P 500. But you could obviously see a lot better returns than the S&P 500. But it's probably not one that I would recommend doing, putting all your money in crypto. You want to only just put a small portion of your money. So that's why I would definitely go with caution into the crypto. Just make sure you're well diversified. Don't just put all your money and lump it on one thing. So that's pretty much it for my search today. I've come up with nothing. I can't find anything that really is better than the S&P 500 based on historical performance. So let me know, guys, do any of you go with this kind of strategy where you just regularly put money into an index, or do you like to prefer and just have some of your own stocks that you pick and just continually update your portfolio? Let me know whatever you like to do. I'd be very interested to know in the comment section. So thanks very much for watching. If you did enjoy the video, I would really appreciate it if you hit the like button and subscribe to my channel so you get to keep up to date with more content like this in the future.